Right, so this is just going to be a little bit of a stock talk update, right? Some things that I said on Tuesday, Wednesday, if I'm not mistaken, and kind of building off of that. So I believe I made that on Monday, actually, right? So Monday, right, I was kind of describing the potential short opportunity on Qs within the Thursday, October 30th gap from the earnings reports that we had, right? This was kind of the Friday gap up, the very notable failure within that range. The Monday gap up, the very ugly kind of exhaustion bar within this overnight gap that was pretty meaningful as well. Um, and just the overall breakaway gaps and exhaustion that we see when we see like the gaps kind of occur above the previous highs to new highs. The gaps be really large and then fade out into FOMC kind of footprint hanging man spinning top candle, whatever you want to call it, where there's like a notable seller and a lack of continuation from buyers to really close that candle with a meaningful fall through. Um, so when I was discussing that, it kind of fell under the ideology that we have these gaps left below. We have the Vanna Charm flows coming back next week, the 10th. And that's kind of when our long opportunities are going to present themselves again, because similar to like I said a while ago, I do think that this is building out a distribution. I do think that October 10th was a very notable footprint, similar to the December 18th footprint that we had last year. But I don't think that this is the window that this is going to see a very meaningful decline because of how the end of the year and the beginning of next year, the flows and the lack of participation from a lot of parties during the holidays kind of acts, right, and behaves in general. And it's just market structure and understanding the flows and the re-leveraging effects that occur at the end of the year and the, like I said, lack of participants that occurs during the holiday seasons, similar to over the summer as well, right? So obviously we're getting a little bit more slippage than I imagined, right? We had an initial low established on Tuesday and Wednesday. There's a little bit of a meaningful participation from a buyer here, right? But then we see the failure within the overnight gap from the Tuesday session. The bleeding kind of continue on to Thursday and then a weaker close as well. And then we're getting a gap down and a little bit of a bleed on Friday. But what I will say is I don't mind this, right? We can potentially, we've taken out some weekly lows here from the week of the 20th. If we do continue to bleed and sweep the lows of the October 10th candle on both of these names, that's a lot of meaningful liquidity that's going to be swept, right? And the fact that we're more than likely similar to how we saw like 100+% rise in the VIX, or I guess 70-80% rise in the VIX in October, we'll see a VIX pop as well, right? And then that'll result in a lot of crushing of these contracts and a lot of fear that'll kind of stem from what's probably like a sell that's potentially off of the government shutdown, something like that. It doesn't really matter the kind of macroeconomic perspective here. What matters is the behavior of the participants within the market and how that kind of fear is going to more than likely give you a notable sign of a like distribution building out, but not necessarily something that's going to be meaningful in terms of a sell, at least on the broader equity market quite yet, right? So I do like to see this. I do think that we can continue to see um, some long opportunities though, and I'll discuss some names that I really, really like going forward. But I'm not necessarily going to say that this is the cleanest short quite yet, right? I think the financials will give us a little bit of a clearer picture. The energy sector doesn't look bad still, right? We have USO. This looks like a pretty good chart, I will say, if I'm being completely honest, right? We can throw this in a watch list. Oh, really? What can I remove? Right, we can throw this in here. This doesn't look bad, but it doesn't look like anything crazy. I think that as far as the energy sector, it'll be an outperformer next year, but not necessarily anything I'm super like. I like Oxy a lot, but that's about it, right? In terms of like a commons trade. XLP, a pretty nice weekly anomaly being put in here after a notable kind of couple of climaxes built out, right? And when we take out the April lows, there's just a lot of money built up here, right? And then that's the previous January lows that we had established as well. So this is very meaningful in the consumer staples sector side of things, right? When we have our kind of third potential low established underneath the January lows and the April lows, where we saw historic volume being put in. So that's something that I would definitely keep an eye out in terms of this sector. Nothing that I'm super, super confident in quite yet, but when we have a massive kind of one-sided sell result in a notable stall within this range, a nice little spike, and then a capitulation happen. It's very reminiscent of a party participating within this range, seeing a lot of continuation in terms of like an accumulative daily sequence, and then a failure that's more than likely led by a lot of retail selling and weaker hands that are getting kind of trapped underneath the April lows, where there's a notable amount of volume now being put in, and very small spread candles with wickage that's reminiscent of like a buyer bidding these daily prints into a pretty nice weekly closure. So that's something I would keep an eye out on as well, right? XLK, like these are some gross weekly charts, is what I kind of will say. But like I said, you want to see a little bit of a better character change on a lot of these names, right? Now, something that is very, very notable, the Bitcoin bleed is notable as well, but this is going to be something that, in my opinion, a lot of people are going to kind of get trapped trying to short this. But the NVIDIA chart, a 15% decline from the highs of last week, where we had, the exhaustion kind of be very reminiscent of distribution building out and a nice decline. I think this is going to be a phenomenal short. We have the earnings report in a couple of weeks, right? I think this is going to be a short that mirrors the DeepSeek report, or the DeepSeek gap as well, that I actually caught, because we've seen very notable signs of a distribution being built out. What I wouldn't really mind is something similar to how we had like the 130 range over here, where just a path of least resistance was kind of established. So essentially like a bidder at this 130 range, the previous resistance from August, and it's like the floor that we'd established, right? There was like 1, 2, 3, 4 attempts to bid off of this range, and the progression was just stalling, right? Stalling in January 7th candle, right? And then finally we had the character change, the tape flip, the weak buyer show his hand, and then the breakdown, and it bled with ease because we've already wiped all the demand from this range. The party has already wiped that buyers from this range, and what you get is just a very, very easy bleed to occur after that, right? So that's something I'll look at on NVIDIA. I honestly would not mind a decline to 164, maybe off of the report, and then a spike to potentially take out these highs or put in a lower high, right? I think this is a notable distribution where the progression is stalling, though, very crystal clear. Meta is going to be a good long. I do like Meta comments back up to like 700, right? We're seeing the volume kind of die down off of the earnings report. We're seeing the spreads get very small into the golden pocket range from the April lows and the gap from May 12th, right? So that'll be something I look for, a reversion to the mean candidate in terms of like a commons trade. You can probably take like a Meta 2x bull ETF and long this from like the 600 range up to the 700 range. That's a 15 to 20% move on regular commons. That's a 30 to 40% move on leveraged commons on the ETF, right? So that's a big watch going forward. But I mean, overall, like I really do think that this is a good opportunity for a lot of these names to get the reversion that they're needed and to get a lot of fear to be built out, right? Because I don't think this is going to decline off of this. Simply put, right? I think that this is very reminiscent of just how a distribution builds itself out, right? And how these parties are trapped, and how the demand is wiped, and how the weak hands are you know the weak hands, right? That's how these things work, right? You have to think about the bigger picture here, in my opinion, right? I think UNH declining to the golden pocket, sweeping the August 15th gap is going to be very nice. I still like this for commons. Like I said, there's a great opportunity to long this about 60%, 120% on the leveraged ETF as well, with a couple of options trades throughout here. But once you see the kind of higher highs being exhausted off of the earnings report into a gap fill, right, you have to take that into consideration and understand that this is going to decline and revert to a range where we can see a little bit of a stronger buyer show his hand. I don't like how Nike is bleeding through the gap. I would really want to keep an eye on that $60 range to see how this behaves in terms of the COVID lows, but I still do like this chart. Ford looks very good. I still like comments on this to like 15 on a shorter term perspective, and then a longer term perspective. I have a lot of potential for this name potentially being built out. And then an options trade will set itself up here. We just have to wait for like a pretty crystal clear like structure to develop, because this could sweep further into the peg. I would like for it to sweep into the peg and give you an internal structure to long up to this candle's high, right? Snap, really nice gapper off the report. I still like this back up to 930. This is actually going to be a really nice weekly look with some volume on this wick if we can get a strong closure. And this is actually like a really nice daily candle as well, basing the lows that we put in 2020, right? So I still like this up to 930, potentially up to 10 on just commons. Path is potentially developing a higher low within this NWOG, which is really, really appealing to me as well, basing that 618. I think this is going to be a really good continuation prospect up to the $20 range. CRM is okay. I'd like it to potentially build out a third lower low underneath the August lows. Um, I've talked about LLY. Ideally, we get a really nice ripper through this bear gap from the earnings report in May. Now, a base on top of this gap is going to set up another options opportunity. I talked about UPS. I like this to 100 to 110. That's really about it, right? There's a couple shorts that could be good, but I don't really see anything that's super, super worth it. Just continuing to keep an eye out on a lot of the same names that have been looking kind of gross from a higher time frame perspective. The hood distribution I think is very notable. The Nvidia, the AMD distribution, the Palantir distribution, the TSM distribution. These are all seeing very meaningful progression. These are all seeing meaningful fall through from a seller, but nothing in terms of a character change that offers a short-sighted opportunity quite yet, right? So just a quick little update on like my perspective in terms of the market going forward. It remains relatively similar to what I said a couple weeks ago, right? A nice little decline to trap a lot of early shorts and wipe out a lot of these buyers up in this range that are now going to sell into this decline. And then we're going to see a lot of those hands change, ideally take out these lows and develop a little bit of a continuation, but also continue to build up this distribution, right? So pretty much it. Pretty simple, right?